First, let me thank our witnesses for taking time to be with us today to talk about how to help small businesses prosper. As a former tax attorney and CPA for nearly 30 years, I know firsthand the tax complexity is a big problem facing small business owners. Today, we're going to examine one way to simplify life for small firms by looking at the issue of cash accounting, the cash method of accounting, which offers a simple, straightforward solution for entrepreneurs to record business income and expenses. In cash accounting, a business records income and expenses at the time the funds are received or paid, just like with a personal checkbook. And it makes it fairly easy to track cash flow, the lifeblood of many entrepreneurs. Perhaps because of this simplicity is the preferred method of accounting for small businesses. In the other, more complicated method, accrual accounting, requires a business to record income at the time a sale is made or an agreement to provide services reached, regardless of when the payment is actually received. By the same token, expenses are recorded when they are obligated to be paid, regardless of when the funds are actually dispersed. In determining which accounting method to use, small business owners must comply with the Internal Revenue Code. Most businesses are required to use the accrual method, though exceptions exist which permit firms of certain types and sizes to use the cash method. Ultimately, whichever method is used can have very real effects on how a small business operates. Given this, it would be in the interest of us here in Washington to ensure our nation's job creators have the flexibility to use the accounting method that best suits their operations and gives them the best chance to succeed. We are fortunate to have with us a group of leaders within the accounting community, both industry experts and small businesses, that help other small firms with their accounting services. I look forward to learning firsthand how they perceive the utility of the cash accounting for small businesses and how we can make a cash accounting even easier for small businesses to use. With that, I would like to thank our distinguished panel of witnesses for being here today, and I now recognize the ranking member for her opening statement.
Thank you, Mr. Chair. For many, starting a successful business and seeing it grow is the American dream. During that process, many big decisions must be made: where to rent, what to call the business, and how much capital is needed. Besides deciding which business organizational structure to adopt, one of the most basic decisions is which accounting method to use: accrual accounting or cash basis method. On the surface, the question may seem easy, but small business owners must learn several rules and complicated nuances associated with each technique. These methods primarily differ in when and how income and expenses are reported. The cash method of accounting is widely used by small firms because it is simple to understand and makes day-to-day record-keeping easier. It generally requires taxpayers to report income and expenses as they are received and paid, so it mimics how individuals handle their own personal finances. Simply put, income is reported when cash comes in and expenses are reported when cash goes out. On the other hand, the accrual accounting method generally requires taxpayers to report income and expenses as the transactions are established, regardless of whether cash is received or paid. While accrual accounting offers the flexibility to delay or advance income and expensing to more accurately reflect business operations, the cash method more accurately reflects cash flow. Most small business owners track the profitability of their business during the year based on the balance in their checking account, which is more in line with the cash accounting. So it is not surprising that the National Federation of Independent Businesses found that 41% of small business owners utilize the cash method of accounting, while only 19% use the accrual method. I've also heard repeatedly from small business owners in my district how much they depend on the cash accounting method. Today's hearing will examine the differences between the two accounting methods and discuss what makes the cash accounting method more advantageous for small business owners. We will also discuss the tax reform proposal for expanding the cash method revenue limit and the draft language limiting its use to certain organizational structures. The proposal was introduced earlier this Congress by Chairman Dave Camp of the Ways and Means Committee. Reforms that lower the burden on small businesses by reducing record-keeping and paperwork help lead to increased entrepreneurial activity and a stronger economy. Under current law, C corporations and certain partnerships may not use the cash method once average gross receipts exceed $5 million. However, some partnerships and S corporations are permitted to use the cash method regardless of their level of receipts, provided they are not required to maintain inventories. The draft proposal generated much debate surrounding the cash accounting method because it would expand and limit the availability of this critical accounting scheme. Despite increasing its use to allow businesses with up to $10 million in gross receipts, the draft language prohibits S corporations and partnerships that previously qualified for the cash method from continuing to use it. And that means that personal service corporations like businesses performing accounting, dentistry, and legal services would no longer qualify if they hit the gross receipts ceiling. This raises many questions and concerns for those small businesses, and this hearing will highlight some of them. Providing relief for thousands of small firms is critical to moving forward with tax reform. However, we must be cautious as to how that simplicity is provided. Today's hearing presents the opportunity to have a real debate on the accounting methods used by millions of small business owners and how certain tax reform proposals can affect their bottom line. I want to thank all the witnesses for being here, and I look forward to your testimony. Thank you, and I yield back.
Okay, just some formalities to get out of the way. If committee members have an opening statement prepared, I ask they submit it for the record. I'd like to take a moment to explain the timing lights for you. You will each have 5 minutes to deliver your testimony. The lights will start out as green. When you have 1 minute remaining, it'll turn yellow. Finally, at the end of your 5 minutes, it'll turn red. I ask that you try to adhere to that time limit, although we're not going to be very strict. Introduction of witnesses. Our first witness today is Professor Donald Williamson of the American University, where he teaches and serves as the Director of Masters of Science in Taxation program. He is also the Executive Director of the American's CoGood Tax Center. Prior to this time, his time at American University, he served as Senior Manager for International Taxation at KPMG. A certified public accountant, Mr. Williamson is a frequent lecturer to professional groups throughout the nation, has published over 50 articles in professional and academic journals. Thank you for being here, sir. We look forward to your testimony.
Thank you, Mr. Chairman Rice. Chairman Rice, Ranking Member Chu, and members of the subcommittee, thank you for the opportunity to testify on the need to simplify the tax reporting requirements on small businesses by means of adopting simpler methods of tax accounting, most notably expanding the circumstances whereby a small business may use the cash method rather than the more burdensome accrual method of accounting. My name is Don Williamson, and I am a professor of taxation at American University's Kogod School of Business, where for the past 30 years I have directed the school's Master's in Taxation degree program. The MST program at American offers graduate courses in federal taxation to CPAs, experienced accountants, attorneys, and others who wish to expand their knowledge of our nation's tax law. Our course offerings not only include traditional classes in subject areas such as taxation of corporations and partnerships, but also more specialized areas of the tax law, such as accounting periods and methods, which is the topic of this hearing today. As part of my responsibilities at American, I am also the Executive Director of the Kogod Tax Center, which conducts nonpartisan research on tax issues affecting small business and entrepreneurs. And for the past 25 years, I have had my own tax preparation and tax planning practice for small businesses in Falls Church, Virginia. My written testimony describes the key differences between the cash and accrual methods of accounting for the reporting of income and expenses on the tax return of a small business. For now, let me simply say that the accrual method is undeniably the more complex method of accounting, and that it offers few advantages to small businesses whose chief concern with regard to their financial condition is their cash flow. It is important to note that the method of accounting adopted by a business, whether it be the cash method or the accrual method, only affects the timing of when a business reports income or deductions on its tax return. The accounting method a business uses does not determine whether an item of income is taxable or an expense deductible, and does not affect the total income and deductions a business will recognize over its lifetime. However, despite the greater simplicity and better fit of the cash method for small businesses, the Internal Revenue Code denies the cash method to corporations with average gross receipts exceeding $5 million. I urge Congress to increase the current threshold for use of the cash method to $10 million. Raising the threshold to $10 million will mean that almost 90% of all businesses in the United States could adopt the cash method of accounting. But even when the cash method is available to small business, certain judicial doctrines, such as constructive receipt for the recognition of income, impose unnecessary complication on a small business simply to accelerate the reporting of income by, in most cases, a few months before the actual cash is received. Also, the requirement that a cash method small business may not deduct its cash outlays to purchase inventory until that product is sold may satisfy accounting theorists, but offers no immediate tax benefit to small businesses that expend considerable sums creating jobs. To address these needs of small businesses, I urge Congress to go beyond simply expanding the number of small businesses eligible to use the cash method of accounting and consider enacting a simplified cash method of accounting along the lines described in my written testimony. Under this method of accounting, a small business would be able to look at its checkbook to determine its taxable income. It sounds simple, and it is. Permitting small business to elect a simplified cash method of accounting will reduce tax compliance costs, ease the burden of tax administration, and clarify the measurement of taxable income. I thank the committee again for the opportunity to testify. I'd welcome any questions you may have.
Thank you, sir. Our next witness is Sarah Windham, Certified Public Accountant and Senior Tax Manager at Dixon Hughes Goodman in my home state in Charleston, South Carolina. Mrs. Windham has been in public practice for 15 years and has extensive experience preparing tax returns and consulting with small business clients, with particular expertise in the agriculture and construction industries. She is testifying today on behalf of the South Carolina Farm Bureau. We appreciate you being here, and as you may now begin your testimony.
Thank you. Chairman Rice and members of the committee, thank you for allowing me the opportunity to testify today. My name is Sarah Windham, and I'm a Senior Tax Manager in the Charleston, South Carolina office of Dixon Hughes Goodman. We are the largest CPA firm based in the southern U.S. Our commitment to our clients' success has led to the development of specialized practice groups such as agribusiness. With nearly 60 years of experience serving the agribusiness industry, DHG has developed a deep understanding of the operations and issues affecting the agribusiness industry. I am a CPA with 15 years of experience. I have extensive experience with agriculture clients, construction and real estate clients, as well as many other small businesses. I am here today on behalf of South Carolina Farm Bureau. I am testifying before you today on the potential negative ramifications of the various proposals in Congress that would eliminate for many taxpayers the use of cash accounting for the purpose of calculating income tax liability. These adverse effects include a significant increase in the time dedicated to tax compliance, which will deter farmers and other small businesses from focusing on making a living, as well as an increase in the cost of tax compliance that would reduce the profitability of many farms and small businesses who already work on very thin margins. Another effect would be a significant acceleration of the tax liability without cash available to pay the uncollected yet taxed income. These adverse effects would fall disproportionately on small businesses such as farmers and on professionals such as those in my firm. Most farmers do not employ professional accountants. Many farms' books and records are maintained by family members or the farm owners themselves. Requiring them to switch to accrual basis accounting would force them to hire bookkeeping assistants and or spend additional funds on accrual accounting systems, thus creating additional costs in an industry that continues to face rapidly rising production expenses. One story I would like to share with you reflects the strain accrual accounting can put on farms. One of our farm clients was being asked by his financial institution to provide accrual financial statements on a quarterly basis. As with most farms, they keep their books and records on the cash basis. After explaining the additional fees that the farmer would incur to have us assist their staff in converting the books to accrual basis, it was agreed that cash basis statements would be a better option. Farmers by nature manage risk and volatility. They are literally at the mercy of nature, the effects and aftermath of weather, and commodity prices. Since their income can fluctuate widely from year to year, accrual accounting coupled with our progressive tax system would likely cause farmers to pay more tax over time than a company in a different industry with stable income over the same time period. Cash accounting also allows them the option to even out their taxable income comparable with long-term earnings of other industries. It gives them the ability to plan for capital investments and large purchase of inputs without incurring debt. An independent research firm, Informa Economics, revealed that U.S. agriculture producers required to switch from cash to accrual basis under the proposed new laws could pay out as much as $4.84 billion in taxes over the next 4 years. According to this study, those same farms have only $1.4 billion in cash reserves to pay the additional taxes. If the tax proposals associated with the accrual accounting are effective in an unprofitable year or farm owners cannot otherwise meet their capital requirements, the farm may be forced to downsize. Over 17% of the U.S. workforce is employed in the agriculture industry. The estimated $4.84 billion in tax that would be required to be paid by farmers may cause them not to hire additional employees or to lay off employees they already have due to downsizing. We have many clients required to use accrual basis accounting for various reasons in the Internal Revenue Code. As I mentioned in my introduction, I have expertise in construction. Especially in today's economy, many contractors are experiencing the pains of collecting receivables and cash flow. Contractors may not receive payment until well after they've invoiced their customers and recorded income under accrual accounting. Oftentimes, they may be filing their tax return well before those receivables have been collected. In a recent experience I had with a contractor I've been working with, he was faced with extending his tax return several years in a row in order to collect the revenue that he needed from his receivables to pay the taxes, incurring penalties and interest. After many years in public practice, I believe that the proposals required for farm operations to use accrual accounting would have a detrimental impact to food producers whom it would affect and impact. These proposals would have no additional cash available to make tax payments, cash that would otherwise be used to grow business, create jobs, and serve communities in which those businesses operate. Thank you for allowing me to testify today. I would like to thank Chairman Rice and other members of the committee who have supported opposing limitations on the use of cash accounting. I would be delighted to address any questions from any member of the committee today. Thank you.
Thank you, ma'am. Our next witness is Terry Durkin, an enrolled agent and owner of Durkin Associates, a tax preparation and representation practice in Burlington, Massachusetts. Mrs. Durkin started Durkin Associates in 2006 after 21 years in the software industry and was recently chosen as the president-elect of the National Association of Enrolled Agents for 2014 and 2015. She has a BS degree in applied mathematics from Yale University and an MBA from New York University. Mrs. Durkin is testifying today on behalf of the National Association of Enrolled Agents. We appreciate you being here, and you may now begin your testimony.
Thank you, Chairman Rice, Ranking Member Chu, and members of the subcommittee. I'm Terry Durkin, an enrolled agent and president-elect of the National Association of Enrolled Agents, which represents the interests of over 46,000 enrolled agents across the country. I'm also a sole proprietor. My practice is primarily focused on individuals and on small businesses of less than $500,000 in gross revenues, what I refer to as micro businesses. Today, I share with you my perspectives as both a tax practitioner and a small business owner. Over the years, it has become clear to me that the business checking account is the focal point for most small business bookkeeping. Small businesses use the business checking account to measure cash flow and profits, and to a great extent is their tax accounting. As a result, any change to the tax law that requires small business owners to move away from the simple checkbook accounting or cash basis accounting has two negative effects, both increased complexity and restricted cash flow. As Congress begins reforming the tax code, I urge you to keep in mind how essential cash basis accounting is to startup businesses, especially these micro businesses. I have 6 recommendations. First, increase expensing under Section 179. Because Congress has not enacted legislation to extend expired tax provisions, expensing of capital purchases is currently limited to $25,000. This is a big drop from $500,000 deduction that was available for the last several years. Also, the purchase limit for Section 179 property is $200,000. This, again, is a big drop from the $2 million total purchase limit of the past several years. You can see the tax planning challenges we face when taxpayers do not know in advance which provisions may or may not be extended. I urge Congress to increase the Section 179 expensing to at least $250,000 and to increase the total purchase limit to at least $1 million. Second, remove uniform capitalization rules for small businesses. The uniform capitalization rules, which were enacted as part of the Tax Reform Act of 1986, require certain direct and indirect costs attributable to real or tangible personal property produced by the taxpayer to be included in either inventory or capitalized into the basis of such property. I recommend that Congress consider removing this rule for small businesses and allow them simply to expense the costs. Third, allow small businesses to use pure cash accounting even if they have inventory. In general, taxpayers must account for inventories if the production, purchase, or sale of merchandise is material to the production of income. In these circumstances, taxpayers must maintain inventory records to determine the cost of goods sold. Fourth, allow small businesses to expense leasehold improvements. While the current list of potential tax extenders would provide some relief from having to depreciate improvements to leased property over 39 years, I urge Congress to allow these costs to be expensed under either Section 179 or its own specific tax code section. A 15-year depreciation is certainly helpful, but it can still be a problem for small businesses. Fifth, allow small businesses to deduct all startup and organizational expenses. A taxpayer may elect to expense up to $5,000 of startup expenditures in the tax year the business begins. A corporation or partnership may elect to expense up to $5,000 of organizational expenditures in the taxable year the business begins. I urge Congress to allow all of these costs to be expensed for small businesses. Sixth, and finally, increase the limit on repairs and improvements. Under the new IRS rules, smaller businesses that lack an applicable financial statement, such as my microbusinesses, may expense amounts paid for property costing less than $500, rather than depreciating that property over several years. Taxpayers must elect this new provision annually and must have documented business procedures in place. You can see taxpayers must do a lot of paperwork here for a small benefit. I would recommend a rule that allows small businesses to expense these costs in the year made. Based on my experience as a small business owner and as a tax practitioner, I believe the above recommendations would substantially simplify operations, ease paperwork burdens, and improve cash flow for many businesses. Thank you for your time and attention.
Thank you, ma'am. I would now yield to Mrs. Chu, who will introduce our final witness.
It's my pleasure to introduce Mr. Stephen Mankowski, the National Tax Chair and National Secretary for the National Conference of CPA Practitioners. He is also a partner at E.P. Kane & Associates CPA, LLC, where he advises individuals and small businesses on issues related to accounting, taxation, business consulting, and litigation support services. Mr. Mankowski has a unique view of running a small business and also representing small businesses that rely on him for business management and accounting advice. He is a graduate of LaSalle University. Welcome, Mr. Mankowski.
Thank you, Mr. Chairman and Ranking Member Chu. Again, my name is Stephen Mankowski, and I'm a CPA. I'm the National Secretary and Tax Policy Chair of the National Conference of CPA Practitioners and a member of the American Institute of CPAs. If I were to ask the average taxpayer about the difference between cash and accrual basis of accounting, most would not know the answer. The same is true for today's business owners. Several times each year, I'm asked to write off bad debt. It can be written off under the accrual basis, yet not under the cash basis. Why? Because in the cash basis of accounting, if the income was never recorded on the books, it cannot be written off. Part of a CPA's job is to ensure that taxpayers comply with tax code. Many business owners don't realize that there are other considerations to operating a business, including keeping separate books and records, paying themselves a salary, additional tax filings, etc. LLCs have become a common business structure for new small businesses. Often the business owners, however, are not aware of the tax ramifications. LLCs can be taxed as sole proprietors, partnerships, or even S corporations. The choice of business structure, however, does not affect the accounting basis. I have found that small business owners simply think in terms of cash in and cash out. Many started their businesses after being downsized. They have lived their lives on the cash basis, so operating their business in this fashion simply makes sense to them. They provide us with bank statements, check stubs, and invoices to analyze their business activities and prepare reports that are used solely to prepare their tax returns. These owners do not have systems in place to fully track accounts receivable or payables. Further, they do not have the excess funds to put the systems in place. To convert their financial information into an accrual basis would require adjustments for uncollected revenue, unpaid payroll and related liabilities, prepaid expenses, inventory, etc. The owners will not only be responsible for knowing what adjustments need to be made, but also their valuation. Ultimately, despite the business owner's reliance on accounting professionals, the fiscal responsibility still falls on the owners. Converting to an accrual basis of accounting might simply be a one-time benefit for the government. Once the conversion is completed, the annual effect might not be significant depending on the type of business. Newer entities or entities with minimal accounts receivable or accounts payable would likely have a small tax increase and possibly even a tax decrease. Entities with larger receivable base, however, would not be so fortunate. To convert, they would need to record all open receivables as current income and all unpaid bills as current expenses. The impact of this added income could propel the owners into higher tax brackets, which could lead into phase-outs of itemized deductions and personal exemptions, phase-out of other deductions and credits, including tuition and student loans, when the increased income is reported on their individual tax returns. In addition, taxpayers may find themselves subjected to the new 3.9% net investment income tax, surtax that went into effect this past filing season. These tax increases will not only affect the taxpayer's federal income tax, additional state and local taxes may also be due because these returns usually have to be filed on the same basis as the federal tax returns. Further, many municipalities also impose gross receipts taxes on all businesses. If there's one common thread resonating from the IRS, it has been to reduce taxpayer burden. While this can mean many things, ultimately I believe the IRS realizes that business and taxes in today's economy have become even more complicated. Requiring businesses to change their accounting methods without any specific reason would truly be in conflict to what the IRS has been working to achieve. In conclusion, the majority of businesses are permitted to choose their accounting methods. With the guidance of financial professionals, they are able to elect the most appropriate accounting method for them. Forcing a business to use the accrual basis not only complicates their business, but also requires the owners to take time away from operations to focus on changing an accounting method. Ultimately, one does not start a business simply to focus on accounting. Forcing this change will do just that. I would like to thank Representative Rice and the other members of the committee for their ongoing support in opposition to the limitations on the cash basis of accounting. Thank you for the opportunity to present this testimony today, and I look forward to your questions.
Thank you, sir. I'm going to defer my questions till the end. I think we have some members who are in a little bit of a hurry. So, Mrs. Chu, would you like to start?
Thank you, Mr. Chair. Well, Mr. Mankowski, the goals of our tax system should be to encourage investment and ensure economic competitiveness while limiting complexity. I understand that cash accounting is easier and requires much less record keeping for small businesses. Most importantly, a business owner may not need formal training to understand how it works. And I hear this from my constituent small business owners time and time again. Can you describe how losing the ability to use cash accounting will affect the small businesses that you advise?
Certainly, I'll try to be as brief as possible with this. Cash accounting is how many small business owners think, and that's how they've been making their living. Their goal is to just pay their fair share of taxes and to just manage their business and to pay their family expenses. Losing the ability to function under the cash basis and have to go into an accrual basis could hinder the growth of the businesses. If they know that adding a specific partner onto their practice would then result in that firm having to convert to an accrual basis of accounting, could really hinder the operations of the business and could really question if they need to add or where their growth is really going. In essence, it would stagnate growth, not promote growth. And ultimately, if the goal is to be competitive, that would make the firm that has to now account on an accrual basis of accounting, it could in fact make them less competitive in the environment or in their business environment. And ultimately, it's making their business more complex, not less complex. And ultimately, it would result in higher taxes to the owners of the business.
Okay, and Mr. Mankowski, Mr. Kemp's draft language proposes raising the gross receipts limit to $10 million, meaning any qualified personal service corporation over this limit must use the accrual method. Can you discuss the concerns about treating some business structures differently than others based solely on their income level?
By treating them based on their income level, it will actually, again, it will really create a situation where that business might not be competitive against their competition. If they know that if they continue to grow their business, they're going to end up paying more taxes. There's issues that could relate with pass-throughs to retired partners that now may end up getting a larger tax liability for income that the firm hasn't even received yet. And further, in going through many of the small businesses, as was mentioned by Ms. Durkin, the small businesses don't necessarily have ample cash flow, and when it comes time for paying their taxes, especially newer businesses, they may not have planned accordingly, even with assistance of their accounting professionals, for what their liabilities may be. And ultimately, making this more complex makes it much more convoluted for the owners and takes them away from what their goal is, which is operating their business.
Thank you. Ms. Windham, personal service businesses like lawyers and architects often work on a contingency basis for their clients. I understand you have personal experience working with construction contractors whose payments are often delayed. Can you explain how these payment structures work with both cash and accrual accounting, and which method is preferred by businesses that you work with?
Well, as I mentioned in my statement earlier, I had the example of a client who received his receivables very late and was forced to extend his tax return, and actually in his case incurred a fair amount of interest and penalties because he was forced to use the accrual basis of accounting. So I think that's a perfect example of the effect it would have. Had he used cash basis accounting, he would have waited another year to report that income in the year that he actually received it, as opposed to having to extend his tax return and pay the interest and penalties that were calculated due to that. And he was in a situation where it was very close to the filing deadline. So had he not been able to collect those in time for the filing deadline, he may have been forced to borrow the money to pay his tax liability under the accrual basis of accounting.
Thank you. Professor Williamson, in support of simplifying the cash accounting method, your testimony detailed the differences and difficulties that small businesses face when complying with current cash accounting rules, such as various judicial doctrines and exceptions to expense reporting. Does the Camp draft proposal alleviate some of your concerns, or what recommendations would you make to the current Camp draft proposal?
Representative Hsu, I'm here today to represent small businesses, and our view is that small businesses need the cash method of accounting, period. I know many large businesses also are on the cash method and feel very strongly they need to stay that way despite the Camp proposals. But I'd like to emphasize that taxpayers be given as much latitude as possible in electing their method of accounting, be it cash or accrual method. I just see constantly my clients, I have a practice in Falls Church, simply do not understand the accrual method. They're cash basis people, cash in, cash out. It's the balance in the bank account that concerns them most month to month, and that's what I'm here to speak to today.
Thank you. Ms. Duncan, you suggest allowing small firms, Durkin, you suggest allowing small firms to use pure cash accounting even with inventories, which is currently disallowed. As inventory accounting can be complicated, how would such a recommendation make it easier for small operations with inventories?
Sure. So I think it really is a matter of timing when you can take the income and the expenses. So by allowing a small business to really keep to their checkbook what they bring in and what they take out, whether there's inventory involved or not, really does make it easier for them to do their operations. So by having the ability to not have to deal with inventory really does, although it is a matter of timing, to make it simplified and stick with the pure cash accounting.
Thank you. I yield back.
I'm going to start with Mr. Mulvaney because I think he has some other obligations.
Thank you, Mr. Chairman. I appreciate the accommodation from you and from my fellow colleagues. Back when I was a normal person before I had this job, I had experience with both cash and accrual methods. I had a restaurant company that we used to run on a cash basis, a law firm that was on a cash basis, and then I ran a real estate company that was forced because of the nature of its business and the size to run the accrual method of accounting. And so I've sort of seen it from both sides, and I remember very vividly the ugly reality of being the accrual business, of having to pay taxes on earnings that I hadn't collected yet, and I didn't care for that very much. Ms. Windham, you've mentioned that you've got a large agribusiness stable of clients, and it's something that's important to me because of where we're from. Both for Mr. Rice and myself, we have large ag businesses in our district. Tell me what it means to a farmer, and don't talk as an industry, because every time we talk about $4.8 billion of this, it sort of gets lost. Tell me what the individual farmer, what it means to him or her if the law changes and they have to change from accrual to cash. What does that mean in terms of what they have to go through and what they have to pay?
Sure. I think to address the first part, what they would have to go through, we've dealt with this with clients who have banking relationships, for example, in my testimony, that just don't understand that farmers operate on cash basis and the bank has asked them to do on accrual basis. It's very difficult for them to track their work in progress or their inventory to estimate what their corn may be worth at the end of the year as commodity prices fluctuate.
And let me stop you there for just a second, because you've mentioned, I want to drill down on this a little bit, because you've just mentioned words that make sense to you and me, but not to ordinary citizens, which is estimating your work in process, and in this particular circumstance, what your corn is worth at any particular time. Tell us what that involves.
For example, the work in progress. Throughout the year, as the farmer starts, usually in our state at least, sometime in the spring, planting. So they have seed, they have fertilizer, they're spraying throughout the year. They have labor cost, which can be extremely high for the planting as well as the picking or whatever they may be doing, and that would entail their work in progress. So throughout the year, as they spend money on the cash basis, for example, they expense these items. On the accrual basis, they would have to track these items throughout the year and accumulate them as inventory, and then determine as they sell their corn or their peaches or their blueberries or whatever it may be, how much of those expenses they've accumulated are attributable to the blueberries or the peaches or the corn they just sold.
And that's subject to be second-guessed by the IRS, isn't it?
Absolutely, it could be. I could see it being very difficult. For example, we'll use corn because I have a lot of farmers that are row crop farmers. If they have hundreds of acres of corn and they buy seed and fertilizer in large bulk quantities, how do you determine I sold all of the corn in this 5 acres today, and 3 weeks from now I'm going to sell the corn on the other 10 acres? What portion of my seed and fertilizer did I use on these 5 acres versus those 10 acres when I bought it all at the same time in March? Could be very difficult for them.
Tell me about the process, because I've never gone through a conversion. I've never had to take a company from cash to accrual. Tell us what that means for a farmer.
For a farmer, it means bringing someone like me in usually, which can quickly add up depending on what kind of record keeping they already have. Most of the farms.
Because the record keeping for the two methods is entirely different.
It's entirely different, correct.
Okay.
They're used to maintaining basically like a checkbook, which several people have mentioned, and that's easy for them. They can know what they start the year with in their checkbook and what they finish the year with in their checkbook, just like we all do with our personal checkbooks. You know, switching it to accrual basis can be very costly from a standpoint of having someone assist them, as well as just difficult in that the records don't convert very easily, and that's not how they operate their businesses. Commodity prices fluctuating on a regular basis can make it difficult. Which price do you use today, and which price do you use when you make the conversions, you know, 3 months from now? So it can be extremely challenging, not to mention we don't have many farms in downtown Charleston or in Washington, D.C. They're out in very rural areas, and you don't see too many CFO, controller type people living in those rural areas. So it may be very difficult for a farm owner to hire on staff the talent that they need to make that conversion on a regular basis.
Thank you, Ms. Windham. I appreciate the testimony. Thank you, Mr. Chairman, for the opportunity.
Thank you, Mr. Mulvaney. Mr. Snyder.
Thank you, Chairman Rice. Thank you for calling this hearing. It's a critically important issue. I bring my own personal experience to this. My father's a CPA, had an accounting firm. At the time, it was one of the largest ones in Denver with 35 partners. I started my career in consulting at Pricewaterhouse, as I'm thinking about it, 30 years ago this week. And before coming to Congress, 10 years ago, I was in consulting with what was then the largest single-office private accounting firm in the country, a firm called Black Mankowski. I understand the issue on a personal level, having my own consulting firm. So thank you all for being here and talking about this critically important issue. And Professor Williamson, I know you talked about this being an issue for small businesses, but it's an issue for a lot of businesses. And an accounting firm, or in my case, a consulting firm, that just needs a couple of partners working together quickly exceeds $10 million. But the impact on these professional service firms that have to book expenses and then not get paid many times for 6 to 12 months later would be profound. And to that end, I am circulating a bipartisan letter, pleased to have people on both sides of the aisle working on this issue with Congressman Luetkemeyer, Quigley, and Hudson. And we want to draw the attention to the importance of cost accounting. I would invite my colleagues to all join us on that letter. Speaking of agriculture, Ms. Windham, my district doesn't include a whole lot of agriculture, but we appreciate the value of the food, the corn, the blueberries, the peaches that we eat, and understand that a vast majority of that still comes from the family farm. And those farms require the ability to do their accounting in such a way that makes sense for their business, and that's crucial. The burden of having to transfer from cash to accrual accounting for a farmer, for a professional service firm, obviously is significant. Farmers and ranchers rely on this flexibility to deal with the commodities and weather. There is a lot of uncertainty in business. We all deal with that regardless of the business we have. Adding another level of uncertainty is, I think, the last thing we should be doing, and that's why this is important. But it's not just agriculture. It's not just consultants and accountants. It's dentists. It's engineers. It's architects. So many of these professional service firms, partners working together individually, rely on this. And as I mentioned before, $10 million for a group of people working together adds up fairly quickly. But the impact on the individual becomes severe, and oftentimes it's going to affect retiring partners, as was said before, and we need to touch on all of those. I guess, Ms. Windham, I'll touch with you. The impact, you talked about the cost to convert for a farm. What's the cost to convert for an accounting firm? What would be the impact there?
I think one of the biggest costs for an accounting firm would be, one, keeping up with the receivables and payables, but two, as you bring partners in and out, new owners in and out, and I believe someone mentioned it in their testimony earlier, you could have a retiring partner who is forced to pick up income that may be received after he leaves the firm and retires because it's in accounts receivable, and I know we've experienced in the prior 5 or 6 years with our clients struggling, it may take 6 to 12 months to collect a receivable, as you mentioned. And then the other side of that would be new partners coming in. It may be difficult for them. If a new partner were potentially to come in a year of this conversion, they could be hit with a tax liability that they weren't expecting, not to mention a tax liability they don't have the cash to pay. So I think that's one of the biggest potential challenges for an accounting firm or a law firm or a professional service firm is transitioning partners in and out, and then the massive amount of tax liability that may be experienced with no additional cash. It would take cash away from hiring new accountants or attorneys, from creating jobs, from giving back to our communities, from those types of things. And we just don't have the cash savings to be able to afford to do that.
Right. Mr. Mankowski, you talked about competition briefly and the challenge it is for companies to compete. If you take two small businesses, one on a cash basis, one on an accrual basis, what are some of the disadvantages to the cash basis having to make the switch or compete?
One of the advantages, or disadvantages rather, with the business that's going to be forced to switch over to an accrual basis is that within an accounting firm, as an example, there's generally not a lot of accounts payable that they're going to be having, especially as you get towards year end. However, you could be sitting with considerable amount of accounts receivable from some clients that may have done their year end, or with a plethora of clients that file tax extensions, and also clients that may have been billed for year end tax planning that you may not get billed, may not receive the funds until the following year. The firm that's on the cash basis, they're not recording that in as revenue. So that may potentially allow their partners to keep those rates maybe a little bit lower for their clients because they're not going to have to absorb in a higher tax liability for the individual partners. So in that situation, the firm that's now going to be converting or has already converted into an accrual basis, the owners may be at a disadvantage due to the receivables at the end of the year and higher tax liabilities.
Great. Well, I have many more questions. I'm out of time. Thank you for the extended time. I want to thank again the Chair and the Ranking Member for calling this crucially important hearing on an issue. As our economy grows, we need our small companies, our middle market companies to grow, and this is important to allow them to do that. Thank you very much.
Mr. Hanna.
Yeah, thank you. Thank you for letting me in on this committee. I'm not normally here. I've never heard such unanimity in my life between people. It's nice, and I agree with you, and as a guy who was in business for many, many years. One of the things you mentioned, and Ms. Windham mentioned it also, Mr. Williamson, is that the possibility exists when you make someone convert to accrual, as was on a cash basis, to actually wind up paying taxes on money. And you talk about construction, Mr. Mankowski did, and Ms. Durkin did. Those people have the possibility of actually owing money on money they may never receive, owing money on litigated construction that they may ultimately win, having to go to the bank, borrow money, pay interest,
That's right.
pay taxes, and find themselves holding the bag because everything doesn't come in a few months. Some things come in. And then you have the conversion issue of 10 years trying to recapture, as I think is the language that you use, built-in gains, which is a problem that a lot of people face. So let me start by saying, I agree with you, but I want to understand the other side of the issue a little bit, because it's and Ms. Durkin, when you talk about being able to write off inventory, one of the problems with that for the IRS is simply if you're a growing business, all you need to do is grow your inventory, and you may never pay taxes as you grow until you close. So, and Mr. Williamson made a wonderful point, and that is that everybody ultimately winds up paying the tax they owe. But it's all a little bit about timing, isn't it? It's a little bit about how do you manage your taxes and postpone it? How do you, as gamblers use the word kiting checks, you can kite money, right? You know what I'm talking about. So from the IRS's point of view, if you're going to take the other perspective, because I'm guessing this is about making it a little bit easier for people to comply and for them to actually understand the nature of what you're doing. So, Mr. Williamson, what would you say if you were an IRS agent? How would you respond.
If I were an IRS agent, I'd welcome this proposal of going more on the cash basis, because some of the nuances of the accrual method, some of the uncertainties, when did you receive the income, when can you write it off as a bad debt? I think going on the cash method takes so many uncertainties that IRS agents have to interpret when they apply the law when they go out to a client or to a taxpayer. I would think the IRS would applaud this. And as you've already said, Mr. Hanna, this is all about timing, because over the life cycle of the business, the amount of economic income and the amount of economic expenses will be incurred. And ultimately, the same amount of tax will be paid under either the cash or accounting method. There's no question about that. And your point is well taken. This is about timing. And I can understand why perhaps the Treasury Department and certain members of Congress would want to be on the accrual method, because that would, in some cases, accelerate income into earlier years for purposes of scoring a tax bill.
All right. So basically what we're saying is you can pay now or pay later, but you're going to pay, and it's just a matter of whether you hold your money a little longer and the IRS gets theirs a little sooner is really the
And as Ms. Windham pointed out, whether you have to borrow the money to pay the tax.
Right. Do you agree with Ms. Windham?
I do, yes. I think it does, quite honestly, make it easier for the IRS as well, because they're attending the same continuing education and the same training that a lot of us are attending as CPAs. And as you're well aware, the tax code is pretty tremendous. And even for an IRS agent, knowing every part of it can be challenging. So simplicity, I think, is better. I think as well, unless there's some type of individual tax reform that coincides with tax reform for S Corps, C Corps, and partnerships, that under a progressive tax system, you could potentially pay more taxes over the same period of time as you would, even though you're going to incur the income or expenses. For example, with farmers, it may be really high in a good year, and the next year we may have a drought, and it would be really low. And the year that they have high income, they're going to pay higher rates.
And we have no more income averaging. That's not it used to be around. It's not anymore. So that's an issue for someone in your business.
Correct.
I want to ask you, we got just a few seconds left here, but the economic value of letting people keep things simple, I would say, is huge. And it benefits the country ultimately because they make more money. You all kind of agree with that? Anybody?
I do, and I think taking some comments that Chairman Rice has said in the past, that our small business owners are America's economic engine, and we need to fuel that engine, and cash is that fuel. So by allowing the small businesses to use the cash accounting really does fuel that and powers the economy.
Thank you. My time's expired.
Mr. Schweikert.
Thank you, Mr. Chairman. First, a one-off question, just because of a experience we had a couple of years ago. Have any of you had the experience of doing a conversion and someone that uses one of the online softwares for the management of their business and having some real troubles getting it to work in regards to bad debt, some inventory issues? So I guess it's sort of a universal question of, for right now, any experiences, first on the cash basis, small business accounting softwares, what they do with bad debt, and then particularly a small business that might be using accrual?
Mr. Schweikert, first, under the cash basis, although many of our clients do think that they can write off bad debt, currently, if they're filing under a cash basis, they're not permitted to write off bad debt. As I had mentioned in my testimony, every year I get asked the same question by a number of clients.
But to that point, have you ever had someone present to you in saying, here's my software, and look, it has a category for this?
Absolutely. And I go through it.
That seems to cause.
And I tell them that they're not allowed to, and they ask why. And I tell them, well, you never declare the revenue, so you can't turn around and take the expense. We'll gladly put the revenue in this year, and it's only going to offset, and you'll get zero impact from it.
Ms. Duncan? Or Durkin? Durkin. Hit the mic.
Thank you. I've had the same situation of clients saying that I never got paid for this, and then the discussion is, well, did we ever claim it as income? And no, so you're not allowed to claim that expense.
Okay. And I'm going to skip to the professor because I want to come back to Ms. Windham. Professor?
Yeah, I think what you're illustrating, Ms. Schweiker, is exactly the confusion that taxpayers have and small businesses has, and why we're advocating the cash method accounting. Why can't I take a bad debt? They didn't pay me. Well, you never recognized the income in the first place. And I can't tell you, and I think all of us at the panel have had the experience with our clients where we try to tell them this and they just don't get it. And what that demonstrates is how we need the cash method of accounting to show them cash in, cash out, and really eliminate the bad debt issue entirely, other than for those firms that should be on the accrual method.
Ms. Windham, because you're actually partially generated my memory of this question in a couple of your comments in regards to difficulty in collections and sometimes negotiated settlements, on pay as this percentage of our bill and then complete write-offs, and the difficulties sometimes that causes for even cash accounting when you're breaking over your year, and then the difficulties I've seen with a couple of our personal businesses and those we've helped on, that they're using software and the software keeps popping up, why aren't you telling us this? Am I the only one to have experienced this?
I can speak to a very similar situation, actually, that's happened in the past month or two. We have a client who has an investor who is an attorney who uses the cash basis in his firm because he's an attorney and is allowed to. This particular client of mine is required to be on the accrual basis and prepares their books on the accrual basis. Well, he has asked for a cash basis statement from my client because that's what he understands. And in this particular situation, they are using a QuickBooks, which is a software that many clients use across the country, many small businesses.
I was trying to avoid mentioning any trees.
Well, I started not to,
okay,
but anyway, and it's extremely common in small businesses. And because of the way my particular client operates, and obviously I don't want to disclose their financials, hitting a button, so to speak, to convert to cash basis is an option. However, because of the way they track certain things, the software does not do it correctly because of the way they have to input it. And it's not a software issue, it's a input issue, and there's no other way to input this data for it to convert correctly. So we've been struggling with explaining to this attorney why we cannot produce cash basis without a lot of work.
Have you run into the other externality when there's other partners that you're paying out, and that problem of, we haven't recognized the income, but
yeah, we see that a good bit where we have questions on, for example, a partner has a tax liability on their individual tax return because they're receiving a K-1 with income from the partnership. However, they have not received the related cash. And the first question is, how can I have income and tax if I don't have the cash? And you have to explain to them, well, you have $500,000 in accounts receivable, which you have yet to collect. And when you collect those, you'll have the cash. And it can be a very difficult pill for a partner in a partnership to swallow when they have a large tax liability and no related cash to go with it.
All right. Thank you, Mr. Chairman. It's having run into some interesting issues in this sort of mechanic where a lot of partnership agreements are written where you owe a certain rate of return or pref on sometimes not actually realized income, but in booked income, or those, you do end up in this sort of cascade of problems and borrowing money to pay your partners. So with that, I yield back, Mr. Chairman. Thank you for the patience.
Thank you, sir. Mr. Payne?
Thank you, Mr. Chairman. Ms. Windham, I understand that you support the cash accounting method, but as someone who assists small businesses, do you also believe that some of the current cash accounting rules are too complex and seem to unnecessarily try to match accrual accounting, as Mr. Williamson suggests? Based on your experience, do you believe that the current Internal Revenue Code cash codes should remain as is or need changing?
I think the current cash accounting rules in the Internal Revenue Code are pretty easy for businesses to follow. There are quite a few exceptions and twists and turns, as with anything in the Internal Revenue Code, but for the most part, small businesses can use a checkbook type method of accounting. There are some, as Ms. Durkin mentioned, some issues in there with inventory, depreciation, repairs and maintenance that could quite honestly be simplified, and I think she made some great points in her testimony on simplifying repairs and maintenance. There was a new regulation written on that recently that complicated it, in my opinion. Depreciation could be made a little more simple with making it permanent instead of extending it every couple of years and causing uncertainty for small businesses. Inventory, obviously, as she said, is another issue that can be a challenge for small businesses to track their inventory and not expense it when they actually write the check. So I do think there's some ways in there to simplify accounting for small businesses, and I think her testimony spelled that out pretty accurately. But true cash accounting needs to continue for small businesses to allow them to be able to deal with the challenges of running the rest of their business and not have to focus on their books on an hourly or daily basis.
So it can be very easy, but then you also say it's very complex.
Yes.
Okay. All right. Ms. Durkin?
Yes, I'll give you one example of a client who became a client who was in the theater production. He was starting up to create a theater. He bought leased a building and put $300,000 into leasehold improvements. And sadly, he thought that whole $300,000 would be depreciated in that year because he spent it in that year. And I had to be the one to tell him, and when he came afterwards to me and to prepare the return, well, you can't take the whole $300,000. Some of it we can do 15 years. Some of it we have to do 39 years. So this cash basis person all of a sudden then had these 3 different ways he could take this deduction and not the deduction that he wanted to. So you can see some challenges like that.
Sure, thank you. Mr. Mankowski?
Thank you, Mr. Payne. I can agree with some of the comments, and one of the things that ultimately I think we need to look at is not just if we're going to move the threshold from a $5 million threshold to a $10 million threshold. The $5 million threshold, I believe, went into effect with the Tax Reform Act of 1986. Similar to many of the items in the tax code, they've stayed there and stayed there, but they haven't been inflation indexed, and now they're looking to just come up with a number. If they're going to increase it and actually keep a threshold, they should probably look at some level of an indexing starting from 86 moving forward, or potentially even look to remove the threshold and just allow a business to operate so that as many of us have mentioned, that we're not going to all of a sudden you have a good year, whether you're a hedge fund or whether you're an attorney who lands a big case, all of a sudden you need to convert to an accrual basis. The following 3, after you're out of that 3-year averaging, if you're now below the thresholds, are you then allowed to convert back to cash basis because you're no longer in that threshold? There's some of the complexities that simply doing away with any type of a revenue threshold, even on an average basis, would really work towards simplifying and allow the owners to do what they do best, which is operate their business. And that's why all of us are in the accounting profession. That's what we do best, which is help them manage their accounting aspects so that they don't have to worry about that part of their business.
Thank you. And in the interest of time, I'll yield back.
Thank you, sir. Well, this has truly been a very interesting hearing. I've learned a lot from you guys, and I appreciate you all being here. My concern in all this is that here we sit 6 years after the Great Recession, and we have still an economy that's struggling, negative 2.8% growth in the last quarter. Millions of people have dropped off the workforce because they find it so difficult to find employment. American jobs, every day you turn on the TV and you see more companies moving over. They call it corporate inversions now, but That's really more jobs moving overseas. And I think a lot of that comes from anti-competitive policies that come out of Washington, D.C. I think we make it too complicated. I think we make it too difficult. And I think we cost businesses too much in taxes, too much in red tape. So, and I think that's what I hear from you guys. You know, it's one thing to not create impediments, but it's another thing to actually throw up impediments to hiring and expansion. And I see that in government. And Mr. Mankowski, I think you referred to that earlier when you said the accrual method could actually put up impediments. Is that correct, to hiring and to expansion? Is that right?
That's correct,
Can you
sir.
explain that further?
Certainly. If you have, and I'll take my position, I recently merged my accounting practice. If we continue, and we've been growing our practice daily with more and more clients, if we bring on additional partners that may bring in additional revenue into our firm, expand our services, if we get to a point where at this point we hit a $5 million threshold, and the firm would then have to go through converting to an accrual basis. At that point, is it really worth bringing on an additional partner who may kick you into having to go to accrual basis, or maybe going, not that we as accountants know our way around the system, but potentially spin off part of a practice. I'll stay a partner in my firm. I'm going to spin off part of the practice to one of the other partners. That'll be a separate entity. And now we're staying under the thresholds.
And that doesn't add to complexity at all, does it?
No, but it doesn't add to the complexity, but it's.
Oh, it does. When you maintain separate entities and.
But in that case, it's keeping you out of the thresholds, which isn't what we want to do.
Does that make you more productive?
Absolutely not.
All you're trying to do is to work through some loophole. Is that correct?
Unfortunately, that's what it comes down to.
Mrs. Windham, do you agree that this law, forcing people to comply with the accrual method, that actually makes firms consider not expanding and not hiring and not bringing on new employees?
Yes, absolutely. I mean, some of the statistics I've seen with taxes that would have to be paid without the lack of additional cash, obviously that prohibits farms, accountants, attorneys, whoever, from taking that cash that they've been reserving for growth, expansion. It may be, in the case of a farm, building a new building or purchasing a large piece of equipment or adding a production line. They're going to use that cash to pay tax instead of growing jobs, growing the economy, and growing their business.
Well, and I know this is a hot button topic, but an Affordable Care Act forces people to limit their workers to 30 hours a week, forces them to stay under the 50-person threshold. So you see these policies out of Washington, everybody stands up here and says we're for jobs, but what they do is something different. The policies that come out of Washington actually stifle expansion and stifle job growth. Do you agree with that, Mrs. Durkin?
Yes, the example of the new IRS regulation about the repairs versus capitalization for the small businesses, they have to do a considerable amount of paperwork, declare a capitalization policy, and put it on their return each year for $500. I had a client who had a rental property, and he bought a $800 washing machine. So he did all this paperwork, and he still couldn't use it for this purpose. So the intention is a good one, but practically, when it gets down to it, that some of the thresholds are just too low.
Yeah, there have been reports coming through this committee and fairly routinely say that the cost per, small businesses employ 70% of the people in the United States. And the cost per employee to a small business in terms of regulatory costs, which includes tax compliance, is like $10,000 per employee, far exceeds the tax liability. Professor Williamson, do you see this as a meaningful?
As I hear you speak and the other panelists speak, what I think was going on here from an academic perspective is our advocacy of the cash accounting method does indeed violate the matching principle of accounting, which is somewhat of the catechism, that you want to match your revenues with your costs, and that's the basis of the accrual method. And people in the Academy would agree that the accrual method is a more accurate method for keeping track of your books and records. That said, for small business, as we've said, all of us here in our testimony, it's about the cash. And we can set different thresholds, $5 million, $10 million. I even hear some rumblings that maybe it should be even higher. And for small businesses, it is all about the cash, and it's not about some theoretical matching principle of revenue with cost. And with respect to the repair regs, I know this goes down. We advocated in the tax center that $500 be $5,000, which they gave to the large businesses, but not to you and me.
I hear you, and I agree with you. But the average small business guy, he doesn't know what you just said. And the average person out there watching C-SPAN doesn't know what you just said. So my bottom line crux issue is the effect on American competitiveness and jobs. And my theory is that the complexity created by Washington, and the accrual method being one of those, decreases our competitiveness and puts burdens on job creators. Do you agree with that?
Absolutely. For small businesses, no question.
Okay.
They can hire Miss Windham, or they can hire a new employee.
What I'm worried about is my sons and my grandsons and my granddaughters getting jobs. And what I want to do is put us in a position to make us more competitive in the world.
Absolutely.
This is just one more addition, one more burden on farmers and small businesses. Is that correct?
Yes. Our advocacy here of the cash method of accounting is lighting a candle. We've heard some statements about cursing the darkness. We're advocating here, we're lighting one candle to ease the burden upon small business with respect to the method of accounting they choose in their business.
Let me ask you this. The Ways and Means proposal, Dave Kent's proposal I referred to earlier, does that simplify the burden on small businesses, or does that exacerbate the burden on small businesses?
As I understand it, enables small businesses to continue the cash method of accounting.
And it increases the threshold generally?
Yes.
Mrs. Windham, do you agree with that?
It does increase the threshold. I think it could have some consequences that people may not be aware of, though. For example, farms would be a great example of that. You know, farms are traditionally passed down from one generation to the next, and obviously as you continue to pass down, you may be adding more family members. So there may be other businesses that are created, especially with the movement across the U.S. for farm to table and those kind of things. You may create a retail market or a restaurant or a processing component. And if you have a related party that owns the farm as well as some of these other businesses, you may be forced to pull in the revenue for all the businesses together to calculate your gross revenue. So the farm may be, for example, forced to switch to the accrual basis of accounting, which wasn't intended because the farm owner's sister happens to have a retail market, and they're forced to include revenues from both.
Okay, so the way I understand what you just said is the Ways and Means proposal it actually expands the availability of the cash method, but there are some particulars that you'd like to see changed to make it even more available.
Well, in his proposal specifically, the $10 million threshold, currently there's no limit on most farms, and that would obviously put a limit on farms specifically. So in both sides of it, putting a limit on farms as well as putting a limit on other businesses who may be forced to use these aggregation rules to include multiple lines of their businesses because they're related family members or owners.
Thank you. Mr. Mankowski, you said something at the very beginning of your testimony, and I don't want to mischaracterize it, and I don't think you meant it this way. It almost sounded like you said the accrual method had an advantage in that you could write off bad debt, but under the cash method, that money would never have been taken into income anyway, so the net result is zero under either method. Is that correct?
Yes, sir, that is correct.
Okay. All right. Well, unless anybody else has any additional questions they want to ask.
I'd just like to enter into the record the written statement from the American Bar Association, which lays out their concerns on how the draft tax reform proposals would affect these small law firms throughout the country. And I'd simply like to thank the panelists. I was impressed by the unanimity of your statements and also your very vivid examples of how this would affect small business.
And I appreciate your specific recommendations for how we can make things better. You know, your list of items, Ms. Durkin, you listed, and yours particularly, Professor Williamson. So,
Mr. Chairman, if I can as well, I would like to enter into the record testimony of Jeffrey Wald, who's the CEO of an accounting firm, Kennedy & Co., LLC, that specializes in working with agriculture businesses and understands and says, I think, very clearly states some of the challenges these businesses face and the advantage of the cash accounting method. So,
thank you, sir. Okay. Thank you all for participating today. While tax and record-keeping complexity causes concern for so many small business owners, it is clear that the use of the cash accounting promotes simplicity. Moving forward, we must ensure that our nation's job creators have the flexibility to utilize the accounting method that allows them to thrive. In today's testimony will be helpful as Congress looks for ways to make our tax policies more simple, predictable, and rational. It has been an honor for me and the other members of the subcommittee to hear from this group of industry leaders and small business owners. I ask unanimous consent that the members have 5 legislative days to submit statements and supporting material for the record. Without objection so ordered, the hearing is now adjourned.